giving your pitches is possibly a sales process, and I actually deal with people who have the sophistication and the legal acumen to see that they require a lawyer for any instances. But having said that, if I were to play the devil's advocate, and if I had to tell someone the fact of, why do you need a lawyer for this process, is essentially your broker will always have a lawyer at hand, and like our friend over here said, that lawyer at hand will do the conveyancing, but he will never do the first stage, which is the diligence stage.
Sure.
Right? And I started this conversation with saying the diligence is the most important thing that you actually require the lawyer for. Now, this risk is obviously lessened in a case where it's a primary sale, where the developer is selling you a brand new flat which is recently constructed in a property. But there are obviously a lot of pitfalls there also. Since I work in RERA and I like to spend hours of my time sitting in RERA court, I see a lot of sophisticated developers also promising something else, charging for something else, and then delivering something else. Or the other grievance which I find commonly across RERA is that he said he will take 42 months for delivery. It has been 9 years. Again, the job of a lawyer is not so much preemptive but post. So in that case, you actually need a lawyer not at the first instance or the first beginning. So you're not dealing with a sale over here. The sale has been concluded, the money has changed hands, and there is no property at hand. Now that is another role, but that only comes in post the damage has occurred. So it really depends. There is no one answer for why you need a lawyer. Essentially, it comes down to at any stage you're buying a property, you will require a lawyer, and common diligence, and a sophisticated person will obviously want a good diligence done. So you should seek independent legal advice, not just on the title or the prospectus, also for monies. Now, a lot of times the transaction amounts which are involved in these instances are huge. They vary from anywhere to 50 lakhs to a couple of lakhs to about 1 crore to 1.5 to 2 to 3, even upwards of 3 crores. Now in that instances, in a country where what we commonly call as black money is so common and pervasive, you still need someone to document the process and to basically capture what is going on. I have done matters in NCLT where clients have paid in cash to the developers, which has never been recorded in any books of accounts. No receipt has been provided for them. And when the property or when the company went into insolvency, they had no document to prove to the insolvency regulation professional that they had ever paid that money. So essentially, whatever money you had paid, and this was money that they had received from another sale of property. So it wasn't ill-gotten wealth as such. It was essentially money which was lying with them in cash form, which they decided to reinvest in another property. The company goes down and the trace and the track of that money just disappears. So there are essentially a lot of financial transactions and barriers also involved. What about the tax deduction at source? Who needs to do the TDS? Why do you need to file it with the income tax authorities? That is also another question which is also important.